Okay. So we can get kind of rolling with it. Fred, if you want to lead us off, man, kind of what's going on with you and what you're working on. I saw an email come in the other day. I haven't gotten back to it. You want to go over that or what's the story?
Yeah, that was just a deal I came across down in Cocoa, Florida. It's an absolute triple net deal. They got it listed at, I think it was 1.09 or something like that. Right now it's bringing in 8,000 a month. The tenant's been there for a good bit. The business that is running out of that facility's been there for the actual business has been running for 50 years.
Wow.
So they're pretty established, I would say. But yeah, I was just sending it to you to go over, kind of see what you thought about it. There is like I said, right now it's bringing in about 8,000 a month. But there is a 10% rent increase at the end of the 5 year term there. So it'll be pretty good. And then there's two more renewal options where the rent goes up again. So by I think even as it sits, and the what I was thinking about doing was once we get this Mariana facility off the ground, we can get that reevaluated, borrow some money against that. Really, we could put a good chunk towards that deal to make that mortgage payment pretty, pretty reasonable, and you would already be cash flowing at least, about 4,000 a month right off the bat.
Yeah, this is the can y'all see this?
Yeah, that's it.
All right. Yeah, I mean, it looks like it's a pretty, I mean, it's not a very big building, is it?
No, it's not a big
Yeah, I
building
was
at
gonna
all. That's
say.
why I was kind of surprised with the
Okay.
rent that it was bringing in already. It's
Yeah.
only 70, I think it was 71, 81 square feet or something like that.
Did you run the like just on the pro forma, just do like the quick math?
No, I haven't even done that yet. Right when I saw it, I literally sent it to Mike and to you like right off
Okay.
the bat just to get it in front of a couple different eyes.
Well, let's just
Um,
do it real quick. I mean, why not? Just to do like a quick,
yeah, why not? Yeah,
visual, like while we're sitting here. Pro forma. So this is 71. So let's just do this for all of us, just as we're sitting here, we can run through
sure.
this. 71, 81. Let's see, square footage, 71, 81. And the rent was
Rent's 8,000 a month.
8,000 a month.
Yeah.
1,000 a month. What does it say? Florida, Cocoa. Cocoa doesn't, that's not important. They're asking $1 million or asking basically 1.1 million.
1.09, I think it was.
Just use 1.1 as a round number. Oops, hang on.
Yeah, yeah. Yeah, it was right around 8.7. That's what the cap was, 8.75 or something like
Okay,
that.
that's right in there. Okay. Okay, so if we just do like the quick math on this, if we're going like loan to value, 5 years, interest rates a little lower than this. I got quoted the other day at basically 655. That was my quote on a 20-year AM. So let's just use
Hmm.
that as like an assumable.
Hmm.
It's obviously a triple net lease. You really don't even have any capital expense. I mean, it looks like it's already pretty strong. I mean, if you put 25% down, right? I mean, that's
Yeah, and yeah, my mode of thinking, I was thinking, if we were gonna do, once we got our place refinanced and we had a good chunk of change there, I
yeah,
was thinking of putting even a little bit more than 25% down just to get that down a little bit to have a
sure.
little bit better cash flow. But that's definitely up in the air for sure.
Let's just see here. So I would say this, just so the kicker on this, if you notice, so 25-year AM, oops, a 256-year AM would be sweet.
Yeah, that would be nice.
That would be really nice. Um, all right, so on a 25-year AM, your debt service is 67,000 or 143 debt ratio. Obviously, then you squeeze it a little bit, it gets a little more tight to 1.3.
Okay.
So it's still doable. That's still bankable at 1.3. You're
Yeah.
just not going to have a whole lot of cash flow, right? I mean,
Right,
25
right,
grand, it's a
right.
7% cash on cash. And then let's just look here. If we just had the guy leave money in the deal at 5%, you're not really going to have a whole lot of cash flow after first and
Hmm.
second mortgage debt service. But I mean, the key here would be is the depreciation. I mean, you're talking about, $161,000 of deduction of loss.
Right.
Well, actually, that's probably, it's actually, hang on, it's probably more than that because it's land. How much is the land? Probably, let's call it 30 grand, right? Maybe it's more, maybe
Yeah,
it's
the
less.
land's it's on a small lot. It's only on a half acre.
Yeah, you're talking about, I mean, you're talking about $288,000 of bonus depreciation right there, you know? So you're looking at
Right.
even, you see the cash flow from the real estate, it'd be less than this because of the second mortgage. So you're probably looking at 300 grand of bonus depreciation on this site. And then whatever tax bracket you're in, I mean, Fred, you're in probably a higher one, without spilling the beans.
Yeah,
You're
yeah,
looking
no, for
at
sure.
you're looking at basically a refund of a six-figure refund, basically,
Yeah.
just by buying that site. Now, if you guys inject equity, that's one thing, but if you guys had that seller leave money in the deal, especially if he's going to lease it back, it might be a
Mm.
it might be a great offer for him. Like I'm just looking at the math here, and they just signed how many a 10-year lease?
Yeah, so yeah, they just signed a brand new
Pretty sick.
10-year, and then they have another, like you can see the two options there for 11 to 15 and 16 to 20. So this fire
Yeah,
uh, yeah, this company's been around for 50 years. And then they've been in that building for a little bit of time as well. So, and then you can see on the first option and the second option, it goes up a good little bit. You know, the first one's 114, second one's 125.
yeah.
So, I mean, I think long term it would definitely be a good deal. But I think even right off the bat, you know, like you're saying with the bonus depreciation, and then if you put a little bit more money into it as far as down payment and get that mortgage down a little bit, maybe be cash flowing a little bit more as well.
Yeah, I mean, if you guys even wanted to do like, let's call it, even 30% down and you squeezed it to a 25-year AM, which you could probably get with that lease and that tenant. I mean, you've got some strong, your cash flow 30,
Yeah, yeah,
$33,000 a year ballpark, if you can see that right there.
yeah,
So, in the depreciation is still roughly the same. I mean, you're still going to have um, $100,000+ refund. I mean,
yeah, yeah.
just by
That's
buying it, that's pretty strong, just by $250,000 of deduction,
Yeah, and
by
I
buying
I
that
mean
site.
this just got listed, so I don't know if, you know, I'm sure that, you know, they have a little bit of wiggle room there as
Yeah.
far as I'm sure they're not expecting to get full price right off the bat, but you know, even if you could get it for 975 or you know 970 something like that, you know, you'd be in a little bit better.
I mean, offering at like 965 and then going up to like 980.
Hmm.
Oops. I mean, that's a strong deal. I mean, I know we're always shooting for tens, but
Right.
again, I mean, I think shooting for a 10, I mean, you make an offer at like some random like 900 and like $54,000 and then
Hmm.
knowing that like your ceiling is 980. Really what you should,
Right.
I'm not going to tell you what to do, but what I'd recommend is call your bank or even like today when Mason's on here, I mean, we can just even ask his opinion like on a deal like this, how he'd underwrite it. And then
Sure.
really you can come up with your one pager like what I would do and I'm on the AI train now probably just like all the rest of y'all is when you have this deal, you can download this whole sheet, upload it to Claude, and say, hey, with all this information on here, create me a one pager that I can present to my local lender in order to obtain financing for this project. You can
Okay.
upload this pro forma, upload your one pager, and then have it create a one pager to send to your finance guy. You know,
Gotcha.
um, that sounds almost like too easy or too good to be true or whatever. But man, I look at this and I'm thinking, this is like, you know, all this stuff is really cool to look at, but it can also be convoluted and a little confusing. So,
Hmm.
if you can have it all distilled down and say, hey, this is what we're offering. This is this is what I'm willing to put down. This is the risk that you're taking on as the bank. What do you say? And you tango with them, the cost of inaction, that kind of thing.
Right, right.
So,
Yeah, and as far as the Mariana facility, Things are moving along with that. We finally got the last tenant moving out today, so everybody will be out. And then we have a meeting on Friday with the credit union in Mariana for the build out funds that we were talking about in the last meeting, to get that line of credit.
Yeah.
So
Awesome.
everything's going along with that. Just waiting on, got about another week until the engineer plans are back. And then we'll start the demo and start the build out.
And I love it. That's great to hear. That's awesome. Who uh who else has something positive that they're working on right now, man? I see that Mason just got on here, but I want to open it up for what others are working on or questions or thoughts like that before I turn it over.
Hey, I just have a quick question. I'm getting close to closing on that deal we've been talking about. It looks like it's going to be around September the 1st or
Sweet.
that week.
Nice.
So I'm looking forward to the tax side of it. And I know me and you've talked about it a little bit. So the accountant that I've currently used for the last several years, I've already, talked to him about this. I'm purchasing, this asset and asked him about bonus depreciation and all that, and he's like, "No, you're a W-2 employee. There's no way you'll ever qualify for that." Do you think it's worth finding another accountant? Because it's obviously your accountant has to support you and feel like you're doing things the right way. But if he's not willing to, I guess, I don't know if help you would be the right word, but um, uh, I
I mean,
guess
he's got to
support.
sign off
How
on.
can you say?
That's a good question. So he's got to sign off on that filing, right? When he submits it to the IRS.
Mhm.
If your accountant doesn't believe in what you're doing and how it doesn't. So, for example, I've got another a partner on a building who has a very W-2 job, right? He works, but he's also in real estate. He's got a side business, things like that. And he qualified on paper as a real estate professional, even though he works full time as a W-2. Now, again, I'm not your accountant. I'm not telling you. I've got, of course, people I can recommend you to. I would say that, again, everything is as it depends, right? I mean, that's what every accountant will tell you. It all depends. And it just sounds like he's not going to want to go to bat for you if the IRS comes knocking. That's what it sounds
Right.
like.
Yeah.
But I was just talking with another guy, Craig, that's in our group. I don't think he's on here today. He's flying in the air right now, but we were talking about this, and he's like, the kicker that he's trying to work around too is the W-2, your day hours that you're working at your job do not qualify or quantify as time in real estate. But I look at this like y'all are in this group, like you guys have invested in this group, and I look at that as quantifiable hours. You're on this call right here. How many times have you driven to that site? How many times have you met with a banker? How many times have you spoken with that environmental lady? Like all that stuff, according to my accountant, quantifies as you being in real estate. Like even the shit that doesn't even end up coming to fruition where you go and walk a site in somewhere and it took you 30 minutes to drive there. That's still time in real estate. And so I think it just comes down to the accountant and their desire to want to go to bat if something went sideways. And the main probably reason why, and I don't know your guy, of course, so don't have him take this the wrong way, but he's probably not maybe an expert in real estate in bonus
Mhm.
depreciation and cost segregation studies. And again, I'm not putting words in his mouth. I'm just
Yeah.
saying. So he's probably thinking, I would just much rather the juice ain't worth the squeeze for me, for him personally, to try and take on that if something was to go sideways. Does that make sense? Is that fair to
Yeah,
say?
it does. Yeah.
Yeah. So he might just be thinking, man, Andrew, look, I don't think you can do this because of this, that, and the other. I don't really want to go spend my time really studying this and understanding when in really I've got 1,000 other clients that aren't doing what you're doing. And I'd much rather just not spend my time trying to do something if something did go sideways with you. He's probably looking out for himself, if I'll be honest. Because like I said, I've got some people that if you want to say qualify as real estate professional, I'd be like, there's no chance. But
Yeah.
they did on their own paper. Now they might be taking a risk if you want to call it that, but I think if you own real estate, man, like it's how could someone not say that you're not in real estate? Like it's even if you do have a full-time job. I mean, I got a dentist guy who's a very successful dentist, and he's qualifying himself as a real estate professional. Like he works full time as a dentist, but
Hmm.
he's also qualified himself as a real estate professional based on the real estate that he owns and how much he's looking for property all the time. So I don't know, man. I mean, I say all that to say this. Everything depends, and I think it does depend upon who your partner with tax law is, like your accountant,
Yeah.
that kind of thing.
Okay. Well, I appreciate it. I'll probably reach out to some others. Just
I can
talk.
send an intro, and if you have our data sheet with everybody's info on there, Clay Hagler is my guy, and also the lady that I work with a lot in his office is Beth Sasser. Be more than thrilled to send you an introduction, even if it's a text or email or whatever is best. But they've
Yeah,
been
that'd be great.
awesome. They've been awesome for me. All right, I'll write that down to do that
Yeah. Thank
right
you.
here.
Appreciate that.
Yeah, of course. What else is going on, guys? Mason said he needs 5 more minutes. He's, not sure what he's doing. Pouring a drink, maybe. Let's see here. There's a couple of not new faces we haven't seen in a little bit. I see Pablo on here. I see Dave. I see Rhett, Cody. How is it, guys? What's going on with you? Okay.
Hey, doing well.
Good.
Hey, Noah.
Good
Hey,
to
it took
see
a long
you. Yeah. Hey, Pablo, what's up, man? It's good to see you guys.
Hey, what's going on?
Man, not much. So
You-
happy to have you guys on. Like I said, I was telling everybody before y'all jumped on that I have my banker, Mason Morris. He's with West Alabama Bank on the call. And I just told him, I said, listen, I need, maybe 15, 20 minutes of his time just going through, what makes a local bank a little bit different than a larger bank, right? Like, why would you partner with West Alabama versus a Regions Bank or something along those lines? I mean, for those that have closed deals, it's way better to work with local banks or smaller banks than big ones. But also, even on like what Fred was mentioning a second ago on that deal that he's working on, it's always great to have just a great, like, for example, and Mason can tell you this when he gets back on here, is if I'm looking at a deal, before I even start like considering making an offer, I'll give him a call and just say, hey, I'm looking at this. Like, what do you think? Like, tell me why I shouldn't do it, Because here's the thing, and he'll tell you this, it's that bankers are conservative by nature. All of us in this group are risk takers by choice. And I think it's always a good yin and yang when us as investors are pushing the envelope, right? Like trying to go, go, go and find a way. And then you have the your local banker and a friend who Mason is a great friend is like kind of like pulling the reins back a little bit. And it helps you become a better investor. It creates you being sharper, I guess. So does anybody have, before he comes back on here, does anybody have like a certain couple of questions or thoughts out of the gate um, for him, or again, things you guys are working on, or anything in between that we can kind of jumpstart the conversation? Anybody?
Well, I don't have specific questions about that yet, but I was actually wondering. I saw you made a video where you mentioned you're packaging all of your
Yeah,
properties and
yeah,
then buying a new property in here in Texas.
yeah.
Is
Midland.
that correct?
Yeah, that's right.
That's cool.
Yeah, I'm excited. I'll just yeah, how basically what I'm doing is I had a I'll just be transparent with you. Basically, I had this group from New York
Mhm.
call, and they had 1031 money, and this guy buying in cash, wanting to close fast, and he made me an offer that was like above what probably the portfolio is probably worth, if I'm being honest.
Mhm.
And they had some guy in Huntsville, north of us in Birmingham, call and was just saying, "Hey, we can close pretty quickly, and if and so what we are doing now is we're just extinguishing all of the right of first refusals with the tenants. So they have their basically you go to they have the first right to purchase the building if a third party makes an offer on your building. And so I have three of those right now, and we got two of them extinguished. We got one more guy. We're just trying to get him across the finish line on not wanting to buy. But what makes it fun is so he's buying all of the package, and there's a set price. And based upon these ROFRs or these right of first refusals, we kind of manipulated the numbers for each building size. And we made the ones that had the ROFRs like extremely more expensive than the other ones. And then it just deterred them from wanting to buy at that price. So that's maybe the game within the game again a little
It's a
bit. But
strategy. It's a
yeah,
strategy.
but we got super cute with it. Yeah, so we basically like made these offers on these build like they made the offers when in reality we conspired behind the scenes to like increase those prices. And then that's when they're like, that sounds good. We don't want to buy. We just continue to rent. So it was cool. We're excited about it. Nothing's done yet, but we're on our way. So
That's awesome. Yeah.
yeah, cool. Okay, guys, look, I want to thanks for making it, Mason. Mason's on here. This again is my really good friend and my lending partner, Mason Morris with West Alabama. And Mason, man, again, we're not looking for a ton of your time. We just would like you to tell us a few minutes about you. What makes your business so successful and valuable? And then most importantly, like guys that are running deals and things, what's our relationship look like between you and I as the investor and the lending partner? Like, how does that work? And how can you give advice to the guys in our group to have that same relationship with their local guys? Thanks for making
Yeah.
it, man.
First of all, can y'all hear me?
Yes.
Okay, good deal.
Thank you.
Yeah, so my name's Mason Morris. I'm the regional president here at West Alabama Bank in Birmingham, Alabama. We are a true community bank. We're privately owned pretty much by one family. We're 82-year-old bank. Um, if I was in your shoes, I would want to be dealing with a community bank versus a big box bank called a Wells Fargo, a Regions, name it your local big bank. They're not really in the relationship business like we are. Also, when you're coming to a bank asking for money, particularly for income producing real estate, like that's what y'all are looking at, you want that local knowledge of that market to be able to really not only give you advice on if that's a good purchase or not, but also too to be able to pretty much give you immediate feedback on if that bank's going to make that loan or not. When you go to those bigger banks, they have no authority. You go into a local branch of those big banks, they're going to take basically an application and send it up to the wizard to basically tell you no. A lot of big banks don't do income producing real estate loans on a small scale for like a guy like y'all. So I wouldn't go that route. Nolan and I have introduced probably 3 years ago. We've done several $1 million worth of deals over the years. Nolan's been in and out of deals that we've been involved with. Nolan can tell you firsthand. You want to, even before you have a deal, you want to have a relationship with a banker at a community bank. So when a deal does come about, you have somebody to ping that off of. And there's been several times where Nolan and I have gotten beers and, Nolan's a deal guy. So he brings me a deal and he's all juiced about it. And then I beat it to death and he realizes, maybe this wasn't the greatest deal ever, but
Right.
that's the kind of relationship you need is, somebody who's going to kind of poke holes in what you think is the greatest thing ever. Because we're in the risk business. We're lending our money. And so we got to make sure we get it back. And so we look at it from a completely different lens than somebody who's just chasing a deal and chasing a return. So that's a lot of wealth and knowledge that you're going to get from a local banker too that you're not going to get from one of those big box shops. Really, also too, it comes. You want to be able to call somebody and them tell you yay or nay, not hey, send me all your stuff. Let me go through all this rigmarole and tell you 3 weeks to a month later that we're not going to do the deal. You don't want that either. You know, we're in the business of making loans. We're not in the business of turning down loans. So if it's a good deal, we're going to try to figure out a way to do it. Not only are we looking at, certain property types, but also, we're looking at one, where it is, what type of property it is, if there is a tenant in place, what that tenant looks like, what the current lease structure looks like. If you're going to make any improvements to it, we'll look at that. And really in commercial real estate, you kind of look at the cash flow of the lease, we look at that first to pay us back, but also we're looking at the guarantor as well, because if shit hits the fan, we're coming after you next. So we want to make sure too that you can service the debt alone outside of the rental payments. That's how we have to, check our boxes on the loan. So really, just kind of hit the high points. Um, I guess, just to summarize, we're looking for a capable borrower that has knowledge of, the market that they're looking at. They're not just like a fly-by-night real estate guy, which, being a part of this group helps you get that knowledge. Y'all have great access to Nolan, who's been doing this a while now, to pick his brain about stuff. We're looking for quality properties that have great cash flow that can service our debt. We're looking more for a conservative leverage. I would say, at the top end, you might get 85%. Most of the time, you're going to get 70 or 75% loan to value on a property. And then, kind of looking at that local market of where you're looking at. Being here in Birmingham, there's several markets that we don't have any interest in lending in. I'm not supposed to say that because we're, equal housing lender or whatever, but there's certain parts of town that, I know I don't want to have to go get my collateral back in. So, um, you know, just to kind of hit on the high points. If I was in your shoes, I would go find somebody like me, not necessarily me, but go find somebody like me, to help you get your deals across the finish line.
Tell me this, Mason. When you are when an investor brings a deal to you, like, because it's so true, guys. Like what Mason said, though, I'll be really jazzed about something. I'm like, hey, let's go get a beer and let's talk about this. And then he responds is like, what, really on this one, Nolan? Like, how you gonna pull this off, right? Or whatever. He'll bring me back to earth. I get out of my gravitational force and he brings me back in. But tell me this, man, like when an investor brings you a deal, whether you know them or you don't know them, how how can or does a bank, whether you're the president, whether you're the head loan officer, the loan committee, what are some like hit on some major metrics or things that are important in order to like yay or nay? Like what does your flow chart of operating procedure look like from the lead of the loan coming in to actually approving the loan based on the borrower?
Yeah, I mean, there's several factors there. I would say, for us, geographically where it is, I mean, obviously we're an Alabama-based bank. We will do deals in the Southeast, but we're not really going to go outside of that. Also, too, kind of where's my guarantor? I mean, if they're a New York guy calling me for debt in Birmingham, Alabama, and looking to buy something in Bessemer, like, no. Um, I am doing a deal though for a husband and wife from Southern California whose daughter's going to University of Alabama, and they're buying a multi-unit complex in Tuscaloosa. So, I mean, just because they live in California, I'm still doing the deal for them because it's in Tuscaloosa, it's in our backyard. They have a connection. It's just not somebody randomly dialing for dollars. Um, but we're going to look at the market. We're going to look at the actual property type. Um, and also, a lot of it goes back to who's asking us for the money. Um, what's your track record? Are you brand new at this? Have you done a deal before? What's your day job? Do you have family money? You name it. All that kind of goes into it. And also too, credit scores matter, especially in what we do. So make sure your credit score is good, and you've got your debts in check.
I'd ask another question too, Mason, especially for there's some guys on here that are very seasoned. There's some guys that have not bought property yet. I always recommend people, and I'd like to hear your opinion or like, bring this up, is when someone's first starting out and they want to, and they have not bought a building yet, and they immediately want to borrow $1 million from you, right? Because they got a good deal, it's great. It feels good on paper, right? Even if it's a 10 cap with a 5-year net lease, like it feels like it's right down the fairway. What I always recommend guys to do, because if they come directly to you, not that you'll like the deal, but you won't like the guarantor at that point. It's a little more risky on the guarantor side. So what I recommend people to do, I'd like to hear you explain this, is I say 50% of something is better than 100% of nothing. Like find a partner that has some capital or has a track record of tax returns, that has income, that has maybe some net worth, trade equity in exchange to get into the deal because you can talk all day long about this awesome deal, but if you can't actually borrow the money, then you can't close. Like, what's your recommendation on that? Like, what's your opinion on like, I would much rather get 50% of something versus 100% of nothing instead of being greedy and just saying like, I want to do one deal, even though I don't have the capital myself.
Yeah, I mean, we see that a lot. Rich uncle, rich daddy, father, grandfather, business partner, whatever. Yeah, I mean, if you're starting out, if you can find somebody who's got some depth, if they've got cash or they, assets, whatever, like you said, half of something's better than nothing. So yeah, I mean, unfortunately, real estate, especially if you're starting in the $1 million range or the several $100,000 range, you need some depth to your balance sheet for sure.
And then another question, then I'll open it up for everybody else. I don't want to just hog all this because I see Mason like every other week. But there's a lot of people and a lot of noise that talk about, I love it myself. We play this game all the time, but the second mortgage where the seller leaves money in the deal and finances the down payment. And some people would say that that doesn't exist, that banks don't do that. Can you even if you want to use the example of one of the deals that we've done, but what's your opinion on that? When does it make sense for the bank, for the borrower? Like when can you give those guys how, like, first of all, it's a real thing, it works, and most importantly, like from the banking perspective, how do you guys underwrite a creative deal in that circumstance?
I will say it's a real thing. Most banks don't like it. Um, but it's one of those it depends scenarios. Um, I would say if you're a first time guy buying your first building and you're going to use seller debt and you're not for me. Um, you know, Also we got to look at it too is you're taking on a mortgage with me plus you've got seller debt and you're hoping that the building appreciates enough in value to refinance to get, based on that higher evaluation, which to me means garbage, enough to get enough money to pay him off. Well, all that's great if that happens. But what happens in a '08 scenario and you don't have the cash and that guy wants his money? So we have to look at the other side of that. In the event that that does happen, can you still figure something out? Um, that's why a lot of banks don't like it. So you got to have the personal balance sheet, a loan, be it cash or other assets, to be able to backstop that in the event that your grand plan doesn't work out, that the building appraises enough hypothetically to pay off your seller debt. But it does work. No one has done it more than once. Do I love it? No, but it works.
He's a hater on it until it works, and he's like, "Well, let's go try and do that one again." No, Mason's
But
been,
okay, this is where
yeah.
Nolan learned this too. So it gets a little interesting on the flip side when you've got, okay, so you go and buy a property and you have seller debt. Okay, the bank looks at that as you have zero of your own personal money in that building. So that's a red flag to begin with. That's also risk to us. So then, say you need to make improvements to that building or whatever. Okay, now you're looking for more money and the bank, I'm already in first, your seller has the second, and you're trying to get more money. And now I'm trying to, I have to please regulators too. I have to spend this to where it looks like you've got money in it, but you really don't. So that kind of gets hairy too. That's why banks don't really love the whole seller financing piece.
Well, I'd say
Because
that.
we're in a heavily regulated industry and we get audited about every 2 to 3 years.
No, I mean Mason's right. He's not wrong. I think the The kicker is that if you have a good game plan, and this is what we did on this one deal, is we had a good, I mean, just the one deal. We actually just refinanced Mason out just like 3 weeks ago or whatever it was. But if you have a good game plan, that's what I was talking about a second ago about Fred's deal, and like you have like a good one pager on like, okay, here, bank, this is what I'm putting up. This is what where it's going to go to based on the improvements I'm going to make, and you can outline that and say, bank, this is the risk, and this is how I'm going to mitigate it. This is how I'm going to improve the value of this building, and you can tell the story. I think that's where you get partners like Mason and other, banks like that that can see where you're coming from and they can make that local decision versus like you said, calling up the wizard and then you'll get a decline in 30 days, right? That's my opinion at least. No. Okay, I will open this up for questions. Not that I was just trying to take this all over. Does anybody have what questions, thoughts you have for Mason? Again, Mason has been a massive teammate for me, like a huge partner, and also just a great friend too. So don't ask him any personal stories. Anybody have anything on their mind or questions about what they do at West Alabama or just banking in general?
I got a question.
Bring it,
Go
Zane.
for it.
Cool. Hey, what's up, Mason? I was wondering if you wouldn't mind just going over maybe two examples. One example that you of a deal that you did recently that you liked and why you liked it, and then maybe another example of a deal that you were close to liking and then something went wrong and you ended up not doing it and why that happened.
Uh, I would say, fortunately, in my career, I've been doing this 15 years now. I only do deals I like. Um, it's banking. Shit happens. You know, most of the time we get all the way down to the finish line, and then either something blows up with the seller, or most of the time it's not our clients the problem, it's the seller. Something happens with the seller. I mean, here's an example. I did a loan like 2 years ago, and this goes back to seller financing too. If you have a building and they are going to offer seller financing, you need to ask two things. Are they happily married? And if not, are they going through a divorce or soon to be going through a divorce? Because I've had two deals blow up where the husband was going to do seller financing, then the soon to be ex-wife or current girlfriend found out about it and killed the deal because they wanted all of their money right then so that they could run off and do whatever. So those are two real life examples to make sure your seller financing is, one, either not necessarily happily married, but staying married, or the divorce situation. Make sure the wife knows about it, because most of the time they don't know about it until the 11th hour when they have to sign their name, and then it blows up.
Damn.
Oh,
It's good to know.
cool, thanks.
Who's next?
That actually almost happened to Nolan.
That actually is true. That actually is true. That actually has happened twice now that I'm thinking about it.
I think his was a son-in-law or son,
Well,
not
his
necessarily
son-in-law, but I'm
wife.
also thinking about Jefferson too.
So
God.
forgot Nolan stories. So I've had four of those.
50% of them are with Mason. That's right. Who else is up?
So,
Yes, Fred.
did you happen to see what we were just surface level looking at the spreadsheet of what we were going over in the beginning with that deal down in Cocoa? Just surface level, what did you think of that? And is it something that, looks good to you surface level, or is that something that you should probably stay away from?
I didn't see any of that.
Okay.
I think I joined after that, or that might have been when my owner of my bank called me a few minutes ago and I had to leave. So I didn't see it.
Here, let's just do this
Okay.
real quick. I think this would be a fun, quick exercise, Mason. Just if you don't mind, if you're not opposed to
Yeah,
it. Like,
I got 10 minutes. I'm going to go on the golf course.
what? Yeah. This is just a deal that Fred's looking at right now. It's in Cocoa, Florida. And we showed the pro forma here, just some information. So
Do you live in Florida?
Yes.
Okay.
So this is the the offering, and it's just some information, the pricing that they're offering, the net operating income, the typical flyer that everybody you see every single day.
Yep.
So we punch this into our calculator, and basically they're asking 1.1 million roughly. We came up with an offer price of 980, which gets us to almost a 10 cap on a 70% loan to value. You mentioned maybe 25 years, but really 20 years. And I just got quoted at 655 the other day. Is that pretty accurate right now, Mason?
Yeah.
Okay. And so we were just running the numbers, and it looks like just based off the debt service would be 61 grand, the debt ratio 156. If the seller left money in the deal, which the equity injection would be 300 grand and some change, even if the guy left money in the deal, it was still cash flow. Even with the second mortgage, he still have a 125 debt ratio. But um, just off like your super quick 50,000 foot view, like what I would say from a deal like this, again, a location that you're maybe not familiar with, the tenant has been there for 50 years. They're leasing it back with options, increases, all a typical deal like this. Um, yeah, just give Fred and us just your feedback on like what a banker and how a lender would maybe quickly underwrite this on the back of a napkin and some things that are important to you. And then most importantly, like if you're just would say, hey, yeah, this would be a go, or I have these couple of questions that I still need to be answered, like something like that. Is that fair question to ask?
Yeah. I mean, without digging into it, I mean, it seems like I think you it's priced a little high, but um,
Even
coming to
at
that one,
the 900?
no, at the million number.
Yeah, agreed. He's asking like a million one, which is
Yeah.
wicked tight, but
I would say at that debt service at 125, that's a lot of banks like minimum.
well,
Um,
I'm saying though, if he puts up 30%, his debt ratio would be 156.
okay.
Yeah. Which I always try and shoot for at least a 1.4. I feel like that's whenever I talk to you about that, that's we're usually on the same page.
Yeah,
I try and be like 1.4 to 1.5.
right. I mean, we underwrite the property and we underwrite it globally too. So,
Okay. Okay, that's understood. Either
what
way.
does the business do?
Fire protection company.
Okay. I mean, I see you've got, go back down that map. You got Walmart distribution there. What part of Florida is this on?
This is in Cocoa, Florida, so this is southeast Florida. I live in north central Florida. Where about from
Give
Cocoa?
me a
Probably
city
about
I've heard
three.
of.
So close to Cocoa, you're talking about like maybe it's a couple hours north of West Palm, something like
Okay.
that.
Okay. Um, I mean, it looks like a decent deal, to me. I
I mean,
doubt.
without getting into the weeds, obviously. I mean, he'd have to do that, but it's like
Yeah.
just from a high level, it looks and it's an
And I like that they've
absolute
been
net
there
lease
that long.
too.
I like the business that they're in. I mean, that fire protection's not going anywhere.
Yeah.
I can't get rid of fire protection. Um, I don't know anything about
Yeah.
the market.
So
So,
they're about 20 minutes southwest of Cape Canaveral.
okay. I did a
So
loan
that's
down
where.
there a few years ago, but that's kind of I don't, that's kind of too far south for me. I mean, we play in the Panhandle, but
Mhm.
that's just, if it made sense, maybe, but that's a little too. Go to a local bank there
Yeah. Yeah.
that knows that market. Wait a
I
minute,
just say
they got bedrooms in this place?
I saw that too.
Yeah, I saw that
There you go.
there
First
was a
bedroom.
picture of a bedroom and a kitchen
That's
and
gonna make the
I read
appraisal
through
interesting.
yeah, and I read
Appraiser's
through
gonna
and
be
I
like, wait,
didn't
is
see
this a
anything.
residence?
Yeah, that's what I saw too. But in the description, it doesn't say anything about a residential tenant, which is weird.
I would find out about that because if that is the case, that's gonna make that loan interesting.
Yeah, the only thing it says in the details is about the fire protection and plumbing business. I didn't see anything in the description or in notes on the actual listing about somebody living in a residential space on the property. But when I saw those photos, I asked myself the same thing.
Yeah.
I'd say this one other question too, Mason, and then again we can open it up and then we can come to a close. It's, for guys that are again not in Birmingham, not local to you or to myself, how do you recommend guys introduce themselves to people like you to increase a friendship, increase a partnership, increase the likelihood of closing business? Like what in your if you're getting introduced to somebody for the first time, like what are you looking for in a borrower? What information do you need? Like what does that initial relationship and first impression look like for you to increase the likelihood of success in that relationship?
Yeah, I mean, I would say if you're trying to find somebody like me, go through your accountant, go through a real estate broker, go through an insurance person, whatever. If you know somebody from church, whatever it is. Anytime you have a personal connection to somebody else, it always helps. I mean, that's how I met Nolan was through a real estate guy. Um, so, having a connection to somebody else always helps to, you know, um, make you legitimize you, I guess, is what I'm trying to say.
Like I tell everybody, I say the same thing. Like, let's focus on assembling your team. Go to those meetups, introduce yourself as an investor, and then ask for a referred introduction to somebody else that's in that center of influence. Like, that's what I would recommend is like go somewhere, be an investor, and then ask to be introduced to whoever they run with. Then it's a referred lead at that point.
Yep.
Any thoughts? Any other question? Again, I didn't mean to take that over for everybody, but Mason's a great friend. He's super sharp. I mean, in my book, he's probably the best lender in Birmingham, and he's he's helped me make money. He's also helped me not lose money. And having guys like him on your team are just extremely valuable. And that's the point is to have guys like him on your team. So, anybody else have thoughts or questions for Mason? Because again, another thing too, like this too, I won't just like, you know, if you need information though, I can obviously introduce you on an email to Mason. That way you can get more directly with him. Because there's a couple guys here that are in Alabama that, um, maybe looking to introduce themselves to you, Mason. So,
Yeah, man. Sure.
so anybody else, any other thoughts? Cool. All right, man. Well, that sounds great. I really appreciate the time. Again, Mason Morris with West Alabama is a great friend and a great partner. And then if anybody would like an introduction, I'll be more than happy to send an intro email and you guys can kind of take it from there. So
Everybody
Yep.
appreciate it.
done
See
good.
you.
Cool. Thanks,
Thank
man.
you,
See you,
Mason.
Mason. Appreciate it. See you then. All right, guys. I mean, more or less, good or bad. Mason Sharp. I mean, you can tell that he's a more of a dry guy, of course, but he's wicked sharp. He's a great friend, and if I can introduce you guys to him, and it would be helpful, then dude, I'll 100% do it. So, was that helpful? I want to make sure. Like again, Zane and I were talking the other day. I want to make sure I'm, you know, being as helpful and as direct to you guys as I possibly can. Like, if you guys are saying, hey, I would really love to hear about this one thing, dude, I'll go find a way to have that guy on our next call, that kind of thing. So, anytime you guys would like a recommendation to say, hey, I would love to have someone talk for 30 minutes where it's not like, you're not watching a presentation on YouTube, but you actually are in a conversation. Just text me and I will get that person on, that kind of thing. So, any thoughts or questions before we wrap up? Cool. All right. Well, I appreciate everybody making it on. Again, if you guys, I say it every time, every week, but if you got something on your mind, something, questions, thoughts, opinions, it's great to see Dave on here and Fred and Michael and Zane and Rhett. You know, it's just awesome. I was just speaking I had a 20-minute conversation with David this morning. We were talking about some other stuff. It's just like, I'm blessed to be partners with you guys and thankful for your friendship and your confidence in us. And I just, want to give you as much as I can at all I can. So all the time. So let me know if you guys got something else on your mind. We can't wait to have you, but we'll go from there. Okay. Thanks everybody. We'll see you next time. Thank you.